Traders, today is Wednesday, October 15th, 2008, and we are going to look at the 2-day rule. Traders, last night at about, sometime around 10 p.m. Eastern or OST Omni Standard Time, I put out an Omni trade recommendation, and in that recommendation it stated we are invoking the 2 days up in a bear market sell rule. I am going to illustrate that rule to you. Let's just pull that site up and I want to read it in its entirety. Okay, here was the Omni that went out about 10 p.m. last night before we even made the trade, the highs of 10.08.5. We were sitting up around 10 even, 9.99, and I wrote, traders, we are invoking the 2 days up in a bear market sell rule. Please refer to the chart below for details. The chart below for details, and I put it out before the move happened. As you know me, traders, I don't worry about yesterday's analysis. I worry about tomorrow's. We are invoking the 2 days up in a bear market sell rule, and I showed you an example of how well it worked on the left, and then I showed you an example of where we stand at this moment in time on the right, and I thought we are absolutely going to change direction now, which we did do, and I will show you why I was able to, or why I was brave enough, because it takes, you got to be brave in this environment to put your neck out there on the line and tell people what to do, right? I was confident enough to expect this trading turn, and we will do some homework, and I'll show you why I had confidence in it. So the Omni knew where we were going. The chart pattern was absolutely telling where we would go. And now we'll go look at some charts and see why I had the confidence to do, to sell it. Now, granted, my sell level last night was 10.15, and I'll show that to you. My sell level last night on the work that I wrote down, which I showed to you this in the camera today, okay, my work was to sell 10.15s to 10.17s and then ride this bad boy down, and I expected as possible low today to be 9.43. As it turns out, we traded as high as 10.08.5 and broke all the way down to 9.50 so far, and it is only 20 minutes after noon. So we have the whole rest of this day for the market to easily trade 9.43, if not the 9.10 area. So, what made me confident to take this trade? Well, let's start the opposite way. I'll show you what made it difficult for me to come up with the analysis. If we remove today out of the indicators, indicators are reflecting today's movement. If we simply remove today's bar out of the indicators, I will show you that they were extremely bullish this morning or last night. That is a decently bullish look at the CCI. A decently bullish look at the CCI, Commodity Channel Index. This was a decently bullish look at the Relative Strength Index. You had the WADX, indicator. You had the green clearly pointing up, the red clearly pointing down, and that usually indicates that the market will stay in bull mode. And, we had a nice big fat day on Monday, and it started off rallying on Tuesday. So the work tells you on the onset, as an analyst, that you should be looking for the upside once again. WADX pointing, green pointing up and red pointing down is almost always a buy signal. Open interest going through the roof yesterday. Through the roof. Look at the size of that open interest run. Bullish. And indicators like the slow stochastic, also bullish. So an analyst looks at all of that and says, well, how do you call that not bullish? I mean, right, you saw all the indicators. You would have to think that that's a bullish call. However, before I do indicators, I always look at the market formation before I do anything else. I look at a formation, I decide what I would do based on the formation on the chart. Then I look at indicators and see if they're in sync with what I'm thinking. Now, this was for me, was a little bit of a tough call because, yes, indicators were pointing towards the upside. However, we are in a serious bear market right now. Serious bear market. The formation itself overrides the indicators. Thank you, Piper Call. Absolutely, that's the way it works. The formation itself, when you get into a bear market or a bull market and you are in one of the legs of a big move, the formation itself overrides the most of the indicators. Most of the indicators. So you have to, sometimes you have to take the indicators and go, you know what? They couldn't possibly work today if this happens or that happens. And with that in mind, I will show you why I decided to get involved in this trade. First of all, I deemed this to become a swing day. To me, last night, that is a swing day as far as I'm concerned. And let's just put a little marking there so that this chart illustrates everything I'm talking about. All right, so I believe this to be a swing day when I did my analysis last night. Let's remove this little triangle now and take a better look at this situation. As far as I'm concerned, this to me was a swing day. With that in mind, what is someone to do on a swing day? I've given this lesson before, but I will give it again. On a swing day, you have a market that's moved down, moves down again, then puts in a deep, deep, deep drop, comes back up and settles somewhere up here. That is considered a swing day reversal pattern. You have the down day, next down day, the swing day. If on the next day the market opens and drops down to about the low of the day before, you would buy it right at that point and expect the market to rally higher. That's how you handle a swing day when the bottom comes in. And if you don't think that works, look at what you have right here. Thursday, swing day, Monday. Can everybody see that? So you can see what I'm talking about here. All right, now, the opposite side of that, of course, would be a swing day the other way. So let's clean this up and do a swing day in the other direction. And this is the one that got me involved in the 2-day rule and how to trade for today. Let's say you have a market that begins to rally a little bit. You have a market that runs up. Next day it runs up even higher, puts in a higher high than you would expect, turns around, drops, and settles towards the lower end of its range. Well, now you have an opposite swing day. Now you have a swing day reversal down. So how do you handle that if on the next day the market opens and rallies up to about the highs of the day before the swing day, which would put you right here? You sell that and you expect a big drop to ensue. That's how you handle the swing day if a reversal towards the downside gets put in place. I deemed this to be a swing day just like this is a swing day. Now, I'm going to add today's movement back into the market. And now I'll show you why I had 10.15 for a setup and why I couldn't react until it got there. The market, now that you see today's action, I was supposed to wait for this. The market opens, rallies up to about the highs of the day before, and then we sell it. Boom. That would have been a perfect trade for me. You know what level that is, traders? 10.15 to 10.17. Right there. Had the market rallied slightly higher, I would have put us all in at the highs. The fact that the market did not rally high enough, it got within $7 of where I wanted to get in. $7 is too wide of a margin for me to get in because my stops are going to be $15 away from where I get in on a day like today or any day this week that's so volatile. So if I get us in before we reach my spot, and again, my spot is right here. If I get in before we reach my spot, then I'm breaking my rules. Why? Now, you might say, well, Oscar, that would have been a perfect trade. Why didn't you call it anyway? And I will explain why I could not just get us in at any point. Let's make some room over here. Swing day, once again, let's start another one. You got your swing day in place, right? The day before looked like this. Now we have today. So let's say the market opens today. Let's say it turns out to be a swing day. It gets right to this level. You sell it and you have the big drop. You did a good job. What if it turns out to not be a swing day and just turns out to be another major rally day? Let's say it looks like this instead, because you don't know what's going to happen until markets open, right? This day here, if we go ahead and cover what happened already today and just bring it to the opening, here's where the market opened, right here. Well, you know what? Let's do that another way. Here is where the market opened, traders, right here. The rest of this downward move didn't exist yet. If I get in right here, I don't know if the market's going to actually be a swing day today until it tests itself, right? What if it opens and just goes, boom, we're short on the wrong side of the market with bullish indicators? How can I be short with bullish indicators, right? Here's my scenario for last night. I have to work through this whole thing. So if I'm short with bullish indicators and it goes up against me, well, basically I made a mistake. So if I'm going to call this a swing day, even though I have bullish indicators, it has to prove to me that it is a swing day first. So back to the scenario, and here's what I'm looking at. This day doesn't exist. And we'll erase it again just to make this point nice and clear. This day today, I just removed, it doesn't exist. We opened up right about here. Turns out to be about $7 lower than this area where we'd like to get in. Again, traders, if I get in and it drops, we've done a good job, right? We called it right. However, if I get in and it takes off, well, why the hell did I get a bunch of Omniacs short of market with bullish indicators? As I'm speaking, wind that back, and the open room says Oscar has discipline, something we all have to learn in trading. This is a perfect example of being disciplined. Having discipline is what saves you from busting out of your account or over trading or blowing your account out. Way to go, Oscar. Well, thank you, Win That Back, for understanding this lesson. Absolutely important lesson here. All right. With that in mind, let's continue looking forward. It is irresponsible of me to get us in until the market shows me, yes, it is a swing day. Oscar thinking it will be a swing day is meaningless. The market proving it is a swing day is what you trade. You trade what you see, not what you think. So I think it will be a swing day. Indicators tell me wrong, so the market's going to have to prove right before I get a bunch of Omniacs in. So, with that in mind, again, the market opens here. Had it rallied a little bit more and went up to here, I would have sold it. And if it turned around and broke, which it absolutely did do, we would have had a monster trade on our hands. Now, my sell level was 10.17, 10.15 to 10.17. We opened up at around 10.05.6 and stayed there, rallied in the evening somewhere to around 10.08 and broke down. So the trade did work, but there was no way of me getting in without literally gambling, and I do not gamble, traders. I do not gamble with my analysis. I do hardcore analysis. If the analysis points in a direction, I trade that direction without question every day, every time. So, let me add today back in, and then I'll show you a bunch of other charts which make this work. It worked so well. It's a great trade. We didn't get high enough right to the line, but we did break down, and it turns out to be an excellent, excellent call and an excellent swing day. We invoked the 2-day up in a bear market rule because I realized second day was a swing day. Now let's go explain that, and that puts this whole lesson into focus for you. Look back here, traders. We had another move. Back, it started, I guess, around 9:02 and basically went straight down all the way until we got to 9:18. This whole move right here is what we're breaking apart now. Boom. After a market puts in a low and turns around and has a strong up day, I consider that up day 1 right here. And I'll show you what I mean. Here's the strong low. We went down, down, down. This is the lowest low of this entire move. I'll remove this rectangle and show that to you. The whole move starts up here. The lowest low is this one right here at the end of that line. Then we had an up day. Boom, settled higher. Day 1. First up day in a bear market. Next day it opens, rallies higher. Boom, day 2. Then breaks down and settles in the middle of the day. That was second day up in a bull market. Day 1, day 2, I go short. Look at the trade that takes place. Boom, 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 boom. Straight down. Now we hit the scenario we're in at this moment in time. And I look at it the exact same way. The market puts in a lowest low right here, turns around and rallies up. Next day opens up, rallies, day 1. The next day opens up and rallies big. Day 2 is in place. On the third day, I go short. That is today. That's why I said we are invoking the 2-day rule. Boom. That's why this rule was invoked today. That's why I knew we were going to have a down day. It's also why I could not get in unless it reached my level. Because no one knows for sure if we're going to have a down day. Nobody knows that for sure. There is no crystal ball. God doesn't come down and speak to anybody and let them know what day is happening next. There is no way of knowing for sure. You do sound analysis. You come up with a plan. You trade your plan. The plan was to sell 1015s. It didn't get to 1015. I still traded my plan, if you can believe that or not, by not trading at all. So now that the market has shown us that it is a down day, I know what I can do the rest of the week, so I'm going to have a decent week. And we've had a great week so far, but it would have been nice if that would have rallied just a little higher to get us in. Now, I've been concentrating on S&P lately and not on NASDAQ because the swings in NASDAQ are entirely too volatile. The NASDAQ, because of the amounts of swings that we have seen, the NASDAQ, I can't give you Omniax the okay to jump in. I use the S&P right now only. Let's go look at the NASDAQ and you'll understand that in a moment. Yes, win that back because there's much more volume in the ES than there is in the NASDAQ. Much, much more. Okay. In the NASDAQ, you have the exact same scenario. Second day up in a bear market. The 2-day rule is in effect. The low gets put in here, right? The low gets put in. 1 day up. Second day up. My rule goes into effect. Why? Because we were in a vicious downward cycle. You had a 2-day reprieve. On the third day, you need to be short. That rule is a rule that I have been using for, oh my goodness, I think 1988. I wrote a list of rules. And in fact, I've shown you this before. Here is my list of rules from the 80s. I don't know that you can read them, which it doesn't matter. I wrote this in the 1980s. I still have many copies of it around. Of course, it's digital as well now. And I wrote, buy 2 days consolidation down in a bull market, sell 2 days rally in a bear market. Rule number 6, back from the 80s, baby. See it right there? Rule number 6. I have been doing this since 1984 probably is when I started using the 2-day rule. Every now and then it'll go against me, but that's because I didn't read the markets themselves correctly. Barring that, I use it every time I see it. Now, I see in the open room, you're asking me, is there a link to those rules? Yes, it's jacked in my brain. I will never just outright post those rules. I'll teach them to you as they come into effect. Me just outright posting those rules will not be happening anytime soon. These are things I've been working on since I am a kid. I'm 44 years old now. I don't just post that anywhere. You know what I mean? Once I throw that out on the internet, it could go anywhere. I know these rules work. You all know these rules work because you watch them work before your eyes. So you will learn them from me. If you come to OmniCamp, there's an outside shot. You'll be getting those rules from me in their entirety. But I will not be posting those on the internet. Okay. So, the 2-day rule. 1 day up, 2nd day up, 3rd day you short it, and look at how pretty that trade was. Now, can you call it a swing day? We would have had to have rallied all the way to here for me to get short the swing day. So I was just shorting the 2-day rule with the swing day in mind. All right, traders, one more. Let's go look at the Russell 2000, or what they call now the ETF Z8. Once again, traders, what do you see? Day 1 rally in a bear market. Day 1 rally. And we'll flip those arrows just so that everything's consistent. Day 2 rally. What do you do on the 3rd day? You begin to sell it. And in fact, this had a 2.5-day rally because it rallied 1 day, 2nd day, and then it went up a half a day before it started to break down. Now, it happens almost every time. Look at this. Day 1 rally, big rally. Day 2 rally. Look at the turnaround that comes immediately following. So traders, that is the 2-day rule. The 2-day rule was in effect. We told you it would be in effect, and it worked like a charm, traders. I hope that this is one of the better of the lessons because it is simple and it will work time and time again, especially if you do your homework correctly. One more instance on this chart, traders. Day 1 rally. Look at the settlement on this day, and you can see why I call it an up day. Day 1 rally. Settles all the way at the high. Day 2 rally. Right here. Day 2 rally. What happens on the 3rd day, traders? What does this look like to you? Nice big down day, right? Boom. Day 3, market starts heading down. All right, traders, I'm going to leave you with that. Thank you so much for coming to today's lesson. I really hope that these lessons will help you going forward. I will put this lesson out on YouTube for you shortly, so please use the lessons. And next time you see a setup like this, I hope it helps you trade properly. Thank you, traders, for coming.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.